Hi everyone, it's Blandon here from iRefi Mortgages. Today I want to share with you two power plays that you can have with the revolving credit facility. So first of all, what is it? Revolving credit facility is another structure that you can have for your mortgage. In a normal mortgage facility where you have principal and interest, you pay over time, usually 25 to 30 years, and you pay majority principal at the start and slowly you pay off the interest. And if you want to pay it off faster, you simply increase the repayment amount for a normal facility. Now the problem that you're going to face is that once you increase your repayment amount towards the mortgage that you have, it's a little bit harder to just ask the bank, hey, I'm needing my cash flow, can I drop my repayments? So that's the problem that you might run into by committing to a higher repayment. So having a revolving credit facility gives you that flexibility to actually pay that extra when you have it and also take it back when you need it, like such as an emergency. So how it works is I've got a couple of illustrations here. It's kind of like an overdraft facility account. So you might put a small portion of your mortgage, say 50,000, on a revolving credit facility. And what this is like a floating mortgage. And what happens is, let's say you've got $10,000 of bonus coming in the next month, right? So you've got plus 10,000, and what's going to happen is you will put that $10,000 into your mortgage account, and it will sit in there like an overdraft account. So instead of paying interest on the full 50,000, say, which for example 5%, instead of paying interest on the 50,000, you pay interest on the difference, which is how much? 50,000 minus 10, you pay interest on 40,000 instead. So when your pay comes in, you can put it straight into your revolving credit account. Again, you will pay interest on the difference only. So that's the advantage of having a revolving credit facility. Now, also, if you have an emergency, you're like, okay, it's time to do a renovations, you can actually draw this money back out at the floating rate. So there are two downsides with the revolving credit compared to a fixed loan. You are on a floating rate, so it's slightly higher, usually about 1%, and there's an account fee of about $10 per month. Okay, so this is how a revolving credit works. Now, the second kind of revolving credit, actually before we go to the next one, there's a lot of different names for revolving credit. So at different banks like ASB, they actually call it the Orbit Home Loan. At BNZ, they call it the Rapid Repay. Westpac called a Choice Everyday, and you've got ANZ calling the Flexi account. So it does get a little bit confusing, but this is the basics of it. Now, there's also a second type of revolving credit, but it's actually called an offset account at the different banks. So BNZ actually call this the total money, and Westpac just calls it the offset facility. So how this one works is you might have the same minus $50,000 mortgage, and instead of having this one account for the overdraft, you might want to have different accounts. You might want to have your day-to-day, you might want to have your holiday account, and you want to save up in there, and you might want to have, your kids account. You might have $1,000 in there, and so forth. And then you might have your I don't know, maybe trust, some sort of account that you put away to build up a business, and then so forth. So altogether, what happens is if you add all your savings account together, you might have $12,000. And some people like to have them separate so it's easier to manage. And what the offset facility will do is it'll look at all of the savings that you have in your other accounts, and they'll put it against your mortgage. So for example, 12,000 here, they take off 12,000. So you're left with 38,000. And you pay the interest on the difference only. So this is a very, very good facility as well, and a lot of people actually prefer this. So if you're an investor or you've got a big family with lots of different accounts, or you feel like you need to separate all your money to actually manage it properly, this is a very good facility. So, two power plays on how you can sort of utilize this revolving credit facility. The first one that we see people doing is actually replacing their savings account. So as you can see, the more money you can put in your revolving credit, the more money you're going to save. So a lot of people might completely replace their savings account, because in the savings account they might get around 2.5% return on their $30,000-$50,000 that they put in the account. But straight away, by putting this same amount into the mortgage, you're at least saving the fixed portion, which is at the moment around 4.5%. So let me ask you, if you have savings, would you rather get 2.5% return, or would you rather have 4.5% savings on your mortgage? So straight away, replacing savings is a huge one. The second way you can sort of exploit the revolving credit facility is investment opportunities. So there's a lot of different things you can do. So if you have money just sitting there as like an overdraft account, I mean, normally if you're trying to buy something like a car, you might go to a finance company. But if you got a really good car opportunity that comes up, and you can just buy it with the money that's sitting in your account, you're gonna get it for a lot cheaper. But now if you think about it, like business opportunity, like a machinery or like a small business that come up for sale, it's very, very cheap. You've already got the money sitting there ready to go and just buy it straight away, or even shares. Another way of using this is perhaps property trading. If you've got a big facility, like one of my clients, we just settled $892,000 revolving credit for him. He's able to, what he's trying to use that for is actually put it in a managed fund. So he's a overseas client, and he basically is just waiting for the opportunity for the foreign exchange for the New Zealand dollar to become a little bit stronger before he transfer that money over for other investment opportunities. Otherwise, if you're a property trader, even if you're trying to buy an investment property, you can use the revolving credit as a deposit. So that's one of the other ways you can exploit or use the power of the revolving credit. Hope you enjoyed this video. If you're needing more case studies, we've got 2 case studies down below, and you can also join the Facebook group iRefi Nation for more updates and also new contents. Talk to you guys soon.